Hey, what's going on, fellas? Quick
How you doing,
question.
Joe?
All
What's going on with you?
right, all right. Listen, I'm going crazy with this options thing, man. I see when you guys say invest $1 to make 25. How do you do that? Could you explain it really quick? And with options, like if I know a certain stock is going to hit a certain price by a certain day,
Mm-hmm.
how can I make an option play on it? Because I could watch a video 100 times, I get it. As soon as I turn it off, I forget it. So what's a simple way to just memorize it? Like if, for example, Square hits a certain price.
What price are you thinking is going to hit? And I'll tell you if it's going to hit that price.
All right, I saw it hit 190. Wait, 194,
Mm-hmm.
192 and 196. It does that every couple months, but it usually bounces, let's say, between, I would say, 202 and like 217 around there.
Mm-hmm.
So how could I make, like if it was an options play, how could I play that stock?
I don't want you to say play. I want you to say investment because everyone who
Thank
says
you.
play, I think
Thank you for the
thinks too
correction.
short term. No, you
Thank you.
good. I'm just here to help. If you buy in at 192, hypothetically, what price would you need it to get to a multiple of 25? Now, if you go on Google, they have a whole bunch of futures calculators and options calculators. But I'm looking, if it bounces to 192.70, the top that it probably gets you is 264.86, probably 243.10. Then you need to see for how much you invest or what multiple are you going to get. So if you put in $1,000, will you get 10,000 back, 5,000, 15,000, etc. Now, the more risk you put on, the higher the reward, but also you got to look at probability. So if you do like a daily option, super dangerous, weekly, super dangerous, you could make more, but the risk is higher. So when I'm saying risk one to make 25, you have to calculate that before you get into the trade and not after. But if you go and Google and look at the options calculator, also too, I'll say this too. I know it's not the sexy answer and people don't want to hear it. Have you taken 300 practice trades before you do it? And everybody killed me for saying that last year. And if they would have, a lot of people would have lost a lot less money. Because what I want you to do is master the craft of it, not just jumping in and gambling with it.
And Cisco, are you asking like how to actually like do it?
Yeah, like how to look at it and say, okay, I look at the charts and it gets confusing. Right? I say, okay, it says 2023, this certain price. I want to know how to gauge that. Like if I know if I have a strong feeling it's going to do it within the next month or so. Because right now, what I've been doing, like ever since I've been listening to you guys, and for real, much props to you guys because you made me like a little more patient, a little more knowledgeable. Mm-hmm. I've been buying the stock at 196 and selling it at 122.70. Mm-hmm. I think it was the last trade, and I've been hitting like the last, I say 12 out of the last 16 trades. I've made money. You know what I'm saying? And I started going, like, let's say maybe making 300-400, here and there, but then going maybe another 1,000, 2,000. My last one was for like 1,300. And I'm waiting. If I would have been a little more patient, I would have made a little more. But if I would have waited till it hit the 196, I bought in at 206 and sold at, what was it, 222.80, something like that. So
good exit.
Good. Thank you. As far as actually doing it, that's the easy part. As far as, I don't know what platform you use, but I use TD Ameritrade if I'm doing an option, and you go on the chain, and they give you the dates all the way from like maybe like a week as early as a week and as late as maybe like 3 years, depending on the option. And then you look at the price, and then you might say, okay, I want $300 option, 200, 250, whatever. Then you look at the bid and the ask, and then you actually just buy it. Of course, well, I shouldn't say of course, because people might not know, but the shorter the time frame, the more volatile, the more risky you can make more. The longer the time frame, the less it's still going to be volatile regardless, because options are still volatile, but it's less risky. Obviously, the closer you are to the money, the less risky. The further out you are, the more risk involved, but you can also make more on the reward. So I think it's just a matter of putting together your strategy to say, okay, this is something that I feel comfortable with, because ultimately there's no guarantees, right? It's like, it's not guaranteed. If you have a 200 call on Apple, you can't 100% guarantee that Apple's going to hit $200.
Not the way it's trading now.
You make an educated decision based off of your research, and then you buy the option.
Yeah, and Cisco, I'll tell you another way that people lose money, and it's a good way that you could actually save and actually gain some money, is that bid and that ask. Like that's something that people just kind of overlook. They set the market limit, and whatever the market tells them, that's what they buy. But if you start looking at the bid and the ask in this way, it's going to help you, right? So I always tell people the ask, if you're buying a car, the ask is the sticker price.
Mhm.
Right? The bid is what you're willing to pay.
Yeah.
Got
So if the ask is $5, right, but the bid is $3.70, I'm looking at it like, all right, well, I want to pay $3.70, and this is my limit. And so I'll click my order, and if it's fulfilled, great. But I also know that I have the patience to say, like, all right, well, if it doesn't fill, I'm gonna wait 24 hours, or I'll come back tomorrow until they say, like, all right, well, you're gonna be filled at 370. Had I just took it at 5, automatically I'm gonna be in the negative, right? Because the bid hasn't matched the ask yet. And like a lot of people, when they buy options, they go right into the negative. Like, how'd I lose money already? I just bought it. That's how.
And then also the last thing I'll say about that, everybody has their own strategy. So, for me personally, I understand that you don't really need a lot of money to make a lot of money in options, and you don't need to win every single trade to make a lot of money in options. So, for instance, I've talked about this several different times, especially in our group chat, but people might know that I'm in SMH, and I've made a substantial amount of money on that trade so far. I'm up over 6 figures. So, but I have like 4 or 5 options that I'm actually down on right now. But that one SMH makes up for all of those that I'm down and more.
Yep.
So for me, it's like, all right, I'm not going to risk. So like, let's say I have a portfolio, and 10% of that portfolio is going to be in crypto. Let's say, 20% is going to be for my retirement. So that leaves 70% left, right? So I might at the most probably put like 20% in options, maybe even less, and then the rest in long-term buy and holds. So what I'm saying is that you diversify because you don't need to put 100% of your portfolio. I mean, obviously depending on how much money you have, but you get 1 or 2 really good option plays and you can, hit the home run. The problem is that if you lose consistently on options, you're going to lose it's very conceivable to lose 95%, 80%, 100%. So it's dangerous if you are over leveraging yourself. So just take that into consideration, spread it out. And it's like baseball. Baseball is a sport where if you hit 40%, you're a Hall of Famer. That means you're actually striking out 60% of the time.
Who's in 40? Ted Williams?
Well, you're like the greatest of all time. So if you hit 30%, you're an all-star. So just take that into consideration. I look at options kind of like baseball. Like, you hit a couple home runs and it doesn't matter if you struck out 6 times.
Yeah, and then also for Square, you need to wait to 182.63.
Nice.
So
nice.
It's gonna bleed down a little bit. I love Square. I'm on the record. Square's the new JP Morgan. You gotta wait. We're gonna have a nice little pullback. You need to research what happens from June to August historically, and then you'll understand why. But once you get into a trade, like when I trade the bond futures, like if I put on a trade, I know what I'm going to make before I hit trade, before I hit buy bid or sell ask. You have to know if you put $100 in, 1,000, 10, what are you going to make? That's a part of this thing I talked about tonight. You're playing how much you're going to make. If you take a trade 9 months from now and it's trade 13, you should know how much you're going to make out of that trade on the short end, how much you could lose. All that has to be capped and it has to be run like a business. I see everybody treating trading, futures investing, options like a hustle. And then they don't know what their numbers are. And then things go to hell. And it's like, well, what happened? I'm like, you didn't have a plan. Like I know in 2028 how many trades I'm going to take for the year. You have to plan it out. You have to plan it out. So, but that price will give you a little bit of an edge too. So,
and Cisco, I'm gonna give you this last thing, and I took this from Shadi when he was talking about how he banks, but I actually use this for how I trade. Keep your trades organized, right? So, like if you're doing long-term options, I have one brokerage account that does that. If I'm doing short-term, I have a brokerage account that does that. If I'm on long-term stock, I have an account that does that. Because what will happen is you'll think, all right, well, all my contracts expire in 2022, and then you forget that you have one that was June 18th, and then it expires and you forgot that it was even there. So keep it organized so that you know exactly where everything's happening at. If you're doing it, and if I'm doing day trading, this is where I'm going to TD. If I'm doing long term, I'm in my E-Trade. if I'm doing holding stock positions or I'm holding a custodial account, that might be in my Fidelity. You know what I mean? Just make it a little bit easier for you, so that way you don't get lost and things don't get lost. Money doesn't get lost. All right.
Yeah. And I'll say the same ones you're trading, you should be same thing I said earlier. You will know the direction of the trade if you're already long-term invested into it.
Yes.
For me, I know. Go ahead.
That's why I picked Square and Apple. Okay. Apple, I'm into a little too heavy, so I'm waiting for that to get back where I can basically break even and then just.
What's your average price in Apple?
133.52, I think it is.
Yeah, you're gonna 2 hours. You gotta wait 3 months. You'll be good.
Okay.
Yeah,
fellas, thank you so much, man. Listen,
thank you.
My little 9-year-old came to me the other day, emptied out his piggy bank, threw it on top of my table while I was working, and told me, "Daddy, invest my money." And that's because incredible. He sees me watching you guys, and I talked to him about it. So again, thank you so much, man. I really appreciate you guys.
I appreciate you so much. Thank you.
Appreciate you, man. That's dope. Many blessings.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.